Hey, welcome back, everybody. Good to see you. Good to hear you. Ed Ponsi here, your FX educator here on behalf of FX Street once again. It's great to be back and loving every minute of it. It's Monday. It's the first day of spring. Spring is in the air. Let's hope so. It's been kind of weird weather here in the East Coast of the United States. You know, the month of February was beautiful, and the month of March has been pretty darn cold and more snow in March than we got in February. Very strange. So anyway, a little bit backwards, but it's great to be here. Anyway, every day's a good day. Kind of strange. I've got Bloomberg television on over here, and we've got Mr. Kashkari, who I believe is from the Minneapolis Fed, and the notation on the bottom of the screen says that Kashkari says Fed inflation forecasts have been wrong for 5 or 6 years. You know, honestly, I got to believe this is the first time I've heard. I mean, I know the Fed has been wrong about everything for at least 5 or 6 years, but to actually see one of these folks admitting it is just absolutely astonishing. I mean, you know, these guys never admit that they're wrong. They just keep on being wrong. You know, so it's incredible to me that you actually have somebody from the Fed admitting that the Fed has been wrong about inflation for years and years and years. They keep thinking inflation is going to pick up, and it never does. But now it's finally picking up. Wages are finally picking up, or at least it appears that way. Anyway, another one thing that's not picking up that's very interesting to me, because a lot of the signs are there that the economy is picking up, right? For example, the most recent jobs report, the most recent employment report was actually pretty strong, not just in the number of jobs created, but at the quality of jobs created, right? The most recent employment report was not padded with jobs from retail. In fact, it was negative 26,000 retail jobs. That's because you have big chains like Macy's and Sears closing stores in the U.S. Because young people shop online now. And I didn't really realize how prevalent this was, but they don't go to the malls anymore. I mean, they just stay at home and shop at home. And if it doesn't fit, you know, like I always figured there are certain things that you would buy, like a book. You buy a book online. If you want to buy a book, you buy the book online. That makes perfect sense because it's the same book whether you buy it online or in the store, right? But a piece of clothing, I always figured you would buy that in a store. Because I don't know about you, but I have to try it on, okay? I have to, if it's, I'm not buying a pair of shoes unless I try them on. Okay? End of story. I'm simply not going to buy it. But these people, what they'll do is they'll buy 5 pairs of shoes and they'll keep one and send 4 back. And apparently that's okay according to Amazon.com or whoever they're buying shoes from online, you know, that and this is okay, and this is how it's done now. So you know, I'm the oddball. I'm the weirdo who goes to the mall and tries on shoes, right? And that's the way the world works now. So anyway, so in a world like such as this, it's you know, yeah, you still have to create jobs, but a tremendous number of jobs were created in manufacturing, 28,000 jobs. More than 50,000 construction jobs were created. That's the most I can ever remember seeing being created. And so it's outrageous. And so it was a very strong jobs report. And very few temporary jobs created. People are creating full-time jobs, and that's why you're seeing wage growth. Because it's confidence, right? People are quitting jobs at the highest rate in the United States in years. You don't quit a job unless you feel confident that you can leave and get a better job. That's a very strong indicator. That's something I don't even know if we've ever discussed that before. But think about it. When the economy's bad, everybody's afraid to quit. Nobody's going to quit their job when the economy's bad. You just stick to what you've got because you can't get anything better. But when the economy's good, you can always get something better. You can always find something better when the economy's strong. So it's a really good indicator. People quitting jobs, walking away from jobs is a very strong indicator for the growth, for the strength of the economy, right? Now, so anyway, yeah, you are seeing wage growth and you are seeing some pretty strong economic indicators out there. Consumer confidence is coming out really strong. Things of that nature that they just haven't been that strong lately. Suddenly they're really strong. Okay, and certain parts of the job equation that have been weak for a long time are suddenly coming out much better. Manufacturing, construction, as we said, coming out much better. Okay, there's our setup for British pound, by the way. If you missed that, please go back and review the first 30-minute segment. You can go back and look at the archives for that on FX Street. Our little segment there, a little setup there for British pound. If you missed it, Article 50 will be triggered on March 29th, according to Prime Minister Theresa May. March 29th. So next week, it will be triggered. Okay, so that's our setup. We've had a tremendous rally here. I believe it's short covering. Shorts outnumbered longs 3-1, according to the COT report, Commitment of Traders report from the CFTC, Commitment of Traders. And I think a lot of those 3-1, I think you're seeing a lot of them covering last week, and that's why you're seeing this big rally. I think that's going to reverse. I just don't know when. That's why I'm not risking more than 2% of my account on this trade or any trade. I've got 165 pip target, 55 pip stop, so it's a 3-1 trade. I've got 3 targets. If I hit the first target, I bring the stop to break even. If I hit the second target at 122.60, I bring the stop down to the first target. One thing that I find very interesting is that if the economy is strengthening, and if you have OPEC and even non-OPEC countries like Russia cutting oil production, why is the price of oil falling? Let's take a look. Look at this. We were stuck from the low to mid 50s, really from the beginning of December until the beginning of March. Just low to mid 50s. But if the economy is improving, if the U.S. economy is improving, and even I would even go as far as to say that the global economy is improving. You take a look at the comments out of from Mario Draghi recently, that they're not keen to do any more extraordinary measures to bolster the economies in Europe. Why isn't the price of oil increasing? Why is it falling instead? Because U.S. production is picking up the slack from OPEC and from Russia and from other countries that are cutting production. This is an amazing thing. U.S. production is rising to pick up the slack from other countries cutting production. This shows you that the stranglehold that OPEC and other countries have on oil is breaking. U.S. production is up to, I think, 9.12 million barrels per day now. I think so. It's not at its peak, but it's rising back toward its peak. It's increases in technology, but it's in the ground. And if the price rises again, if the price goes back up again toward 55, they're just going to keep pulling more out of the ground. And also, I don't know if you're aware of it, but there was a huge find It was just announced earlier this month in Alaska. I think it was 1.2 billion barrels. The biggest find in 30 years was just discovered in Alaska earlier this month. They won't be able to pull that oil out for another couple of years, but it's there. It's in the ground. And if the price of oil starts going up, then the incentive to pull it out of the ground increases. It's there. And this is always going to be like a black cloud hovering over the price of oil. I don't think oil's ever going to, I don't know if oil's ever going to get back to $100 a barrel. I don't know. I mean, nobody can see the future, obviously, but nobody really ever saw any of this coming. And it's just going to make it very hard for oil to get back to where it was. You look at this market, right? Obviously, the dollar has a lot to do with this, too. The dollar has been very strong. But you look at this chart. This is ugly looking. This is an ugly looking pattern here for the dollar. You remember we said a long time ago that this kind of looked like a head and shoulders was forming? You see right here? It kind of looked like a head and shoulders was forming there. But then it kept going up. We said, oh, well, look at it now. It still looks ugly. I don't know what you want to call it. The Igor head and shoulders. Remember Igor? The big shoulder? So, you know, from Dr. Frankenstein's assistant. I don't know. So maybe it's a double top, maybe it's a triple top, maybe it's a freakish combination of a double top and a head and shoulders. I don't know. It's the man with two heads. I don't know what you want to call this, but it's a topping pattern. And if it gets under 99.5, all hell's going to break loose. Right? I mean, look at it. If it gets under, look, here's what we know. Okay, you can call it whatever you want, but I'll tell you this. If it gets under 99.5, you know what I know? And you know what you know is this. If it gets under 99.5, if it gets under this dotted line, every single person who's still long the dollar from November until now is going to be losing money. Losing money is a very strong motivator. You're going to have a lot of people who are going to be motivated to sell dollars, and that's going to push this down. And what's going to get pushed up? Euro, pound. Not until this 99.5 breaks. I'm not counting any chickens before they hatch, as they say, right? But if 99.5 breaks, then it's a different story, right? It becomes a different story. Okay. All right. Okay. So anyway, you take a look at this. You look at this overall market. This is the stock market. It's kind of stalled out a little. Before you get all crazy and call that a double top, just remember, it's tiny. Yeah, it's preceded by a big run up, but it's just a little tiny little pattern. We want to see great big patterns form before we get really excited. I wouldn't get, so it's not just the height of the pattern is very small. So if you want to use measuring technique, this doesn't even take us down to 2,300. It's not suggesting a big sell-off in stocks. It's not. It's not even. It could be setting us up for a small, I wouldn't even call it correction. Let's just say a little bit of turbulence. But look at this and compare it to this. This is energy stocks. Holy cow. Look how ugly this chart looks. This is an entire sector of the market. This is Exxon, Chevron, drilling stocks, oil stocks, right? They're just getting beat up. So as the price of oil started to go sideways starting in December, these stocks started to go down. They just have not participated in this big rally. Okay. All right. So we talked about oil. Let's take a look at some of the other commodities. Gold. Gold's been weird. We had that great trade. We bailed out of that trade when this thing broke down. Now it's come back up to where it broke down. I'm not touching it yet. I don't know what to make of this, quite frankly. I think its movements are based on the dollar. In other words, when this came down, the dollar was going up, and now the dollar's been going down since Wednesday, and that's pushed gold up. The dollar's been going down since Wednesday, gold's been going up since Wednesday. What happened on Wednesday? The FOMC meeting. I think it's completely being controlled by the dollar. Show you what I mean. Dollar on top. Gold on the bottom. Do you see what I see? Dollar drops, gold rises. I think it's 100%. In other words, I think the movement you're seeing in gold is 100% based on what's happening with the dollar. So I'm not trading gold based on the movement we're seeing in the last few days. I think the movement we're seeing in the last few days in gold is 100% about the dollar. There's silver, looking very similar. And let's take a look at copper. Copper's weird, man. Again, dollar's been weak, so copper's been up. There's my fateful triangle pattern, failed triangle, shot down, now trying to come back up. I don't know what to make of this thing right now. Okay. Let's get back to the currency world. Euro is rallying, and it's getting up to this troublesome area. It's getting into this troublesome area, I should say. It'll be very interesting to see if it can get through here. It's kind of right on the edge. That troublesome area is approximately 108. It's really getting close. It's up here where it has trouble. It's getting very close to that 108 area. Very reminiscent of what happened with Aussie New Zealand, but we have no idea if history is going to repeat itself here. Aussie New Zealand, right, where it's smashed through all this area of wicks. This was going on for a very long time with Aussie New Zealand. We know Carlos was on board for this, and it just kept on going. This is very, it's really interesting. Let me show you this on a 15-minute. Aussie New Zealand apparently gapped down, right? Must have. Yeah, look at this. That's a pretty big gap. So Friday it closes here 109.75, and then it opens at 109.45, comes down a little more, and then fills the gap. It takes about a half hour to fill that gap. But it's kind of funny to me that Aussie New Zealand gapping 30 pips on a Sunday evening, which I guess it would be a Monday morning out there, in Australia and New Zealand. That's Monday morning. Must have been either some really bad news in Australia or some really good news in New Zealand that I must have missed. But, very surprising. But yeah, that train keeps a rolling. like we said before, there's not a heck of a lot of resistance up here. I mean, you look at this, this is like a sheer cliff face here, right? There's just no resistance here. So yeah, you know, it might get, buyers might get fatigued, you know, but there's really nothing in its past to stop it. It could go to distance point, so worth worrying about. Another 200 pips. Why not? And I know, Carlos, I know you've been on board for hundreds of pips already. So kudos, man. Great trade. Let's take a look at AUDCAD. Boom. Man, look at that thing go. When I now that looks like something where it might be running up a moving average. Let me just pull up the exponential. Kind of, sort of, on the 10, maybe the 20. Let me just check it. I kind of like this off of the 20, off the 20. If it pulls back to the 20, it might be good. Kind of comes through the 10 a little bit too much for my liking, but we could maybe do that off of the 20. You could make an argument for the 10 as well. Carlos is saying the 20 as well. Same with Aussie USD. Says AUDCAD. Let's take a look. Kind of similar. Big dip there, though. Let's go back to AUDCAD for a sec. I like the idea of the 20 here. It's like it's not a lot of hits, but I like it though. Bounce. If it comes back to the 20, that might be worth a shot on Aussie Canada. The reason why I brought up oil to begin with had a lot, like Canada, of course, you think of oil, you think of Canada. And when I think of Aussie Canada, these are both commodity currencies. But the weak dollar is definitely helping gold and silver and copper, but it's not helping oil. Aussie doesn't have oil, Canada does. If you think about currencies, oil is really the main difference between these two currencies. Fundamentally, this chart makes perfect sense. So I do like the idea of buying it on the moving average. You know, it does make perfect sense. 101.72 appears to be the 20-period moving average right now. So ideally, you'd like to see Canada get some strength. You'd like to see this thing pull back a little bit and give us an opportunity to get long. It's all we need here at this point. So it looks good. Is it the same with Aussie USD? Not exactly, because you've got that big dip there, and it sort of wrecks the continuity. So you don't really have that same thing. This has potential also, but for different reasons. But Aussie USD also has potential. Just not on the moving average, but this could also be a trade. Aussie USD has potential because this is a huge resistance level. And it could break. This is 77.50. I mean, look at this. It's had a tremendous amount of difficulty breaking through. Just can't seem to break through 77.50. If it pops through here, it could really go. Look at it's just been trying forever to get through here, and there's a little bit more here at 78 right here. It's been trying forever, for like 2 years to get through here. And if it ever gets through here, it could really run. So I would say this chart actually reminds me more of Aussie New Zealand than of Aussie Canada. But it still has a lot of potential, just not in the same way as Aussie Canada. But yet, but it definitely does have potential. Okay, one moment, please. Okay. Fascinating. Okay, so AUDCAD and AUDUSD also have potential. Just make sure that, and of course Aussie New Zealand has been a huge winner for at least one of the folks in this room. So just remember that we don't want to load the boat on Aussie, right? We don't want everything to be all about Aussie. And if you're going counter trend, this could actually be a short here, theoretically. I mean, like, it's right at resistance. So it could be a short here, Aussie USD. But that would be a short-term trade. You'd be saying, well, look, there was sellers here. So if you become a seller right here at 77.50, you might be able to make money, but you probably don't want to hang around too long in that trade because you would, you know, whoever was buying in here recently might reemerge and keep buying it. Great questions and great participation by everybody. I do appreciate it. Let me just jump back and make sure I didn't miss anything. One thing that also I'm keeping an eye on is dollar CAD. And this has been very much range bound. Let's get rid of that moving average now. Support and resistance, it looks like to me. A lot of resistance, close to 136, and a lot of support, close to 130. This has been going on for 6 months. So it's very well established. Resistance seems to be a little bit shy of 136. Cutting through the wicks here, call it 135.80 and 130.25 on support. Kind of in the middle here, so I can't do much with it. It's interesting, but I can't really do anything with it right now. Can't do anything with it right now, so I'm going to let it go. It's just funny to me because oil's plunging, and but Canadian dollar got stronger. That to me is fascinating. This is a bear flag. So within this pattern, within the support and resistance, I see a bear flag. Let's focus on that for a moment. Do you see it? It's a continuation pattern, which means dollar CAD should continue to fall. I don't know if you can see it or not, but that's kind of an upside down. It looks like an upside down flag. This is the flagpole, and this is the flag. So you would measure, that's about a 200 pip flagpole. So you would measure 200 pips from here, about 134. That gives you a target of 132. I'm just going to put an X there to mark that spot. That's your target for that flagpole. Okay, and that's how a flagpole works. That's how a flag pattern works. So it's a continuation pattern. According to that pattern, dollar CAD should hit 132 in the not too distant future. Now that pattern could fall apart and never trigger. There's no guarantee that that's ever going to trigger. You would want it to break that line You would want it to break. If this just goes on and on and on and on, then it's a wash, right? But you would want it to break this line. Once it breaks this line, it's on. And that's your target, 132. Okay. All right, gang. Great sessions today. Let's come back tomorrow and 2 more sessions. Those will be the last 2 sessions that I'm doing this month for FX Street. I've been here quite a lot this month. I appreciate everybody's attendance and participation. My last 2 of the month, so be sure to attend tomorrow at the usual times. Okay, I look forward to seeing everybody. My name is Ed Ponsi. I'll talk to you tomorrow right here on FX Street. Everybody, take care.